Hello Market Club members everywhere. Adam Hewson here, coming to you from the digital studios of Market Club. We're going to start today looking at Apple. Apple has this big day today. Of course, they're going to unveil the new iPhones, the new iPads, Apple TV, upgrades to the iOS system, and so forth. But I thought we'd look at the stock itself and see what's been going on for the last year or so. We're going all the way back to July of 2013, so it's a couple of years ago, and you can see that's when we had our original buy signal right here, and that's worked out really well. That's the monthly trend. The monthly trend in Apple picked up and started moving up for a couple of years. It's the first sell signal we have had in this stock since, you can see the date here, July 8th at 123.10. It's actually about $11 lower than that right now, and it looks as though it's found support on this long-term trend line going all the way back to July. Now, having said that, Apple's going to have problems around the 114.53, 114.60 level today, in my opinion. Plus, the other negative on Apple is the fact that we have an overall negative trend in the market itself, which is not going to help Apple at all. The other area of concern, of course, is the right here on the RSI, the 50 line. We're getting very close to approaching that, which is going to be resistance for Apple. Remember, when you have the market's in an uptrend, this is support, and when it's in a downtrend, it's resistance. The other thing that's negative, in my opinion, with Apple is the fact that look at how many times we hit this top. Really, this is a large period of time. You're looking really from here all the way through to this level here, and that is a long time. You're looking at many, many months of distribution here. There's something not right with Apple, and whether it's Tim Cook or everything's just being saturated, but there's just a different feel to the company. And I think that's going to be evident when you have a lot of people charging in the tech world. The tech world is a very, very competitive place, and smartphones are certainly a big revenue source for Apple. And I think they're going to start losing some of those revenues to other companies. It's very hard to keep continually upgrading and innovating, and that's the key thing that Apple has to do, and it's going to have trouble doing. So let's move on. Next stock we're looking at is eBay. eBay, all the trade triangles are negative. We're going to go to a candlestick chart and get much closer so you'll see. So this is eBay. You can see the big move down all the way down to 23.5, a big rally back up. eBay is going to have problems around the 27.60 area. That's where the market's going to run into resistance. So I would say you could short eBay and have protection over 27.60. The trend is down on all fronts, and we have a minus 90, meaning a strong downtrend. Even the rally, this is like a knee-jerk rally. So you have the move down, up, and I think we'll see another pullback to maybe the low 20s. Let's see what happens. But again, you're below the 50 line, and that's not a good sign. Plus, the general trend in the markets and tech stocks is somewhat negative. This is Twitter, which has really been on a downward slant for quite some time. You can see that we're below the 50 line right here. And you can also see that yesterday's action, even though the market was extremely strong, it was negative for Twitter. So here you have a move. We open higher today in Twitter. I would say there'd be a lot of selling going in, and I think this is going to once again round down and move to the downside. A lot of challenges with Twitter. I'm not sure what's going on, but it's lost some of its incredible power that it once had, and I'm not sure it knows how to get it back. So let's see how that works out. By the way, the Twitter resistance is 29. I would say it shouldn't go over that level. This is the Dow. Again, we talked about this triangle formation, which is very indicative of a continuation pattern where you have a situation like this, and it generally comes in on the downside. Let's see how that plays out. But generally speaking, we're below the 50 line. The trend is down with the minus 90. You've broken a long-term trend line, which we talked about before, 6-year trend line. That is a major, major item and should not be overlooked. Looking at the S&P, pretty much the same picture there. You can see we're below the 50 line right here, and you have a minus 90. Trend is down, so that's the key thing. Remember, the trend is down. If you scope this out even further, you can see, look at how long this market was above this level. You're talking for most of the year. Certainly over 8 months, the market was sort of in this area, and we're lower than that whole area. It's going to take a tremendous amount of work for this market to get back. It's not going to do it anytime soon. Pretty much the same on the NASDAQ, a little bit different there, but you're getting very close to this 50 resistance line on the RSI, which is something to watch very carefully. I think we're going to see selling pressure coming to this market the next day or two, and we'll see a pop down. Very volatile market conditions. Again, the weekly and the monthly negative, minus 75, not quite as bearish as the S&P 500 or the Dow, but nonetheless, it's a bearish trend. Key level to watch there is 4,836, 4,836. That's where the market should really not go over, in my opinion. But we'll see what happens, or close over this area. So we'll see how that plays out for the rest of the day. Euro dollar, we have all of our trade triangles positive, indicating this market should be going higher. It really hasn't done anything besides move up and then come back down, but it's regrouping here. And you're just around the 50 level. It's too early to say it's going below. Let's see how that plays out in the next few days. Crude oil is above the 50 line. We still think this market's going to go higher, and maybe it's turmoil in the Middle East. I don't know what's going to drive it higher. No one else does either. So, but the bottom line is you're above the 50 line. You have a weekly trade triangle positive, which is how we judge the trend in crude oil. All you need is the daily to go green, and we're off to the races. So I would say probably a move and close over 46.41 today would be another sign this market's headed higher. This is gold. It's sort of another dismal, it's not going anywhere type of approach. We're below the 50 line, which is not a good sign for gold. Mixed picture. We have the weekly up, which is the trend is up on the weekly, but it's down on the negative. You should be on the sidelines in this market at the moment. Hey, I'm Adam Hewison. We've covered a lot of things. I'm sure a lot of people will be tuning in to the Apple announcement today. I think it's around 1 o'clock Eastern Standard Time, but we'll see. And enjoy the day, be disciplined, and don't get suckered into this rally in the market. Thanks for watching.